Hello, this is Brandon Christy from Christy Capital Management with an educational economic update for November 2018. In this month's video, I'll discuss some of the major headlines that influenced markets in October. I will also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. October is often a spooky time for the markets. Historically, it's the most volatile month in the calendar year. Some of the largest crashes have occurred in October, including 1924 and 1987. The most significant sell-offs during the 2008 meltdown also happened in October. This October's results reflected the month's rocky reputation. The S&P 500 lost 6.9%, posting its worst monthly showing since 2011. This performance led to $1.91 trillion in losses. Similar struggles occurred in other domestic indexes and worldwide markets. The Dow gave back 5.1%, the Nasdaq dropped 9.2%, its largest monthly decline in nearly a decade. Plus, global equities had their worst monthly performance since 2012. So, what happened last month to cause these declines? Seasonal volatility may be partly to blame, but settling for that explanation doesn't give you any insight into what investors responded to last month. The volatility started at the beginning of the month when Federal Reserve Chair Jerome Powell indicated that interest rates will continue to rise. However, increasing rates were not the only concerns on investors' minds in October. Ongoing trade tensions and questions about U.S. corporate profits also affected sentiment. In particular, several major tech and internet companies experienced large price drops after releasing their earnings reports. These stocks can attract investors who are chasing results, so both good and bad news can drive large swings in their prices. Thanks to many companies' positive earnings results, however, October ended with upward momentum. By the end of the October, estimates indicated that the S&P 500 companies grew 26.3% during the third quarter. In fact, investors started to buy back the tech stocks that sold earlier in the month, helping to erase at least some of the U.S. index's losses. Markets closed the month with 2 positive days in a row. Well, what happens next? Going into November, market fluctuations could continue for a while. Questions about interest rates and the global economy remain. The midterm elections could also affect investor behavior. But the economy seems to be moving forward. The Federal Reserve recently said we were in a remarkably positive moment. Behind last month's volatility, we also learned that the economy had solid growth in the third quarter and the labor market remained strong. As always, we will continue to focus on the economic fundamentals rather than letting dramatic headlines sway our long-term goals. Well, that's it for our educational economic update for this month. As always, if you have any questions or concerns about what we've discussed, please give our office a call at the number below. Please remember that nothing we talk about here is a recommendation. You can call us at 866-331-7749 and we would be happy to discuss your personal financial situation. Well, this is Brandon Christy with Christy Capital Management and your November 2018 Educational Economic Update.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision.